Yes, traders, it's WCK guys. It's WCK here. We are again. So today is our last NFP, guys. This is one of our last NFP this year. This is the last one. Guys, share, invite your friends to join, Yes, traders. Okay, traders, it's WCK guys. As I always do, I always come here for our NFP or NFP and CPI will be always here. So we are going to look through our last NFP of 2024. We're going to look through our NFP of 2024, the last one, and see what do we expect and what we should be focusing on. Okay. Moment. Let me first modify some of my process here. So we break it down and we trade together. So as always, we always have our analysis in the three ways. Okay, we always have the fundamental part, a technical part, and also some general fundamentals which actually go beyond the Forex Factory chart or what you get. So let's start with our Forex Factory to see exactly what should we expect and what is going on, where our focus should be. So Forex Factory. Yes, guys, our Forex Factory. So today we have fundamentals for CAD, we have fundamentals for USD, but our main focus is on the non-farm employment change and the unemployment rate. So as always, we also have the average hourly earnings. So let's first see the average hourly earnings for the previous month. So we are seeing the last five, let's say the last six, okay? So the dollar has been performing well on average earnings, okay? Average hourly earnings, the dollar has been performing well. We are seeing that it has been winning 5 times. They only lost 1 and it was stable 1. That's out of 60. So it is a positive for dollar. So since the performance has been good, here they expect, according to their forecast, they expect 0.3 as the forecast. They change. They expect to go back to be stable. But what are the chances that it is going to be stable? 0 chances, actually. I would say 0 chances, because we have been winning in the previous 4 average earnings. The dollar has been strong. Okay, so the dollar on the average earnings, it shows a positive. So we should expect a positive US dollar. So non-farm employment change, okay, NFP. So NFP has been the previous 3 times. They have the dollar has lost 3 times. The previous 5 times, the dollar has lost 3 times, and they have only won 2 times. But remember, there is a trick on November, okay, October and November. So remember, October it was 254K. So remember, we had elections, was it November 2nd? Okay, but we had the NFP on 1st. We had the NFP on 1st. So it came out as 120K. Okay, 102K. So it was a slight pullback from the positive. Actually, not a slight, it was a very strong fall. Okay, but we can say that this was due to the US elections which were coming in November, you know. So, but you see, it was 2K, okay, 12K. So it was a very big difference from the forecast. Okay. Now we are seeing that the forecast, they expect that dollar to fight back 218K from 12K. So yeah, it is highly possible, because this, we can term it as a pullback. That this the data for October, it was a breakthrough for the dollar having that strength because of the incoming president, the president-elect Donald Trump. Then November, we had a simple pullback. I believe this was because it was almost in glass. It was clear that, yeah, Trump is going to take over. Okay, so then the forecast, they expect a big difference. Okay, even if the forecast, let's say the forecast is 210. Okay, this is what expected. The data is expected to be 208K. That's the expected forecast. Okay, so even if we get, let's say 180, 140, any number not below than 12K, okay, but it is lower than the forecast. Yes, we can see, if we get such a data numbers, if we get data lower than 218K, we are going to see some small sales on the dollar, but those sales will be not strong. So you might just see a spike up and down. You get why? Because at the end it will be a change. Because remember, previous it was 12K, but they expect it to be 218K. Like it or not, it is either going to be, like it or not, it is going to be higher than the what? Than the previous. Okay? So, than the actual of the previous what? Previous data. So, this also gives a dollar another strong belief, another strong coin, another stronger reason why we should hold on it, why we should back it up. Okay, yeah, so we expect a big change, as the forecast also shows it. So we can expect a big change in the fundamentals of non-farm employment change, specific non-farm employment change. The forecast is 218K, so meaning a positive is what is expected. Now, unemployment rate. So you see that it has been stable. Okay, yes, our August, July, it was bad, but the difference was only 1. Okay, then we came back to be stable in September. Then we had some positive in October. Then it went back to be stable. So meaning it is more likely to remain stable. Why? Why do I say it is more likely to remain stable? If you see the forecast already, they expect it to be stable, to remain 4.1. They don't expect some big changes, because we shall be having Trump. We shall be having Trump in office. That's January. So, sorry guys. So we shall be having Trump in January. President-elect taking over the office. So that's a clear indication that, yes, like it or not, that dollar has strength. That's fundamentally. So fundamentally, we have seen that the dollar is strong. Is expected to be strong in all sectors. Okay. Unemployment rate, non-farm employment change, and also the average hourly earnings. So that's what we should do. What we should be expecting. Now, unemployment rate and non-farm employment, fundamentally, we have seen it fundamentally. Now, let's try to do some technical analysis. Let's try to do some technical analysis on DXY. So, DXY. So DXY, here we come. Let's do some analysis on DXY. Moment. Okay, so this is our DXY chart. Okay, this is our DXY chart. We are going to try to do some analysis on it. Let me use this. So this is our daily time frame for the DXY. Okay, so this is our daily time frame. So what we are going to do, we are going to first identify the area of possible buyers and possible what? Possible sellers. So let's mark this expansion area here as our area for possible what? Possible sellers, and also let's mark this as our possible area for possible buyers. We can expand it more in 4 hours so that it makes more sense. So how do we know possible areas for buyers and sellers? So by simply seeing the areas of expansion. So we have this area of expansion here. We can mark its impulsive breakthrough here. And also, we are going to be playing within this zone here. Okay, we can stretch more in our 1 hour. So this is what we are going to mark. You see, this is an area of possible sellers because you can see how strongly the sellers were respected, or how strongly the sellers won that battle. So also this remains our area for possible possible buyers. So what we are going to do is to mark our entry zones on the on a daily time frame. Okay, so in the 30 minutes. So 30 minutes is going to be our entry, our time frame. So 30 minutes, we are going to mark this zone here. So we are going to mark this area here. That's our zone. This is an area for possible what? Possible sellers. And also we have this zone here. We have this zone here above the what? Above this expansion area. This expansion area. So meaning we have 2 possible areas for sellers. This one here and this one there. That's the area for what? Sellers. Now we shall only focus here on one area of possible what? Buyers. Due to this for this expansion here, we shall mark where the expansion started from. That is the impulsive move, where it started from the point A to Z. Now, this is the setup we have on DXY. Okay, so this is our DXY setup. So I'm thinking that yes, the dollar might lose some value and do some sales, but this is the point here. So the dollar, you see that they have been struggling to break through here. They have been struggling to make this breakthrough. The dollar has been struggling to make this breakthrough here. You see this consolidation here. So this shows that these sellers here lacked power. Okay, they lacked power. So they will need something to back them up to push their selling their selling point. So this is what is going to happen. Okay, so this is what I expect. Before they conclude here, because there is a possibility to touch here and here. Okay, that's a possibility. Okay, that can happen. Selling and then they buy at this point. Okay, but personal as WSC, I would think like before they proceed to beat this point here, they have to first touch here and then come back to sales. Okay, also we have 2 options. If they don't respect this zone, then they will respect this, and long term they will sell. So short term we can see some buys, and when I say short term, it's like today we might see some strong some strong buyers. Okay, but we have this point and this point here. Those are the points we are focusing on. But also there is this possibility here of touching here and then they go here. But that's not something I think is going to happen today. Okay, yeah, so that's the setup we have for DXY. That's the setup we have for DXY. Now let's choose one pair to look at in these 10 minutes, and that pair always, as you know, it is USD JPY. Why do I always use USD JPY? More, it respects more the what? It respects more the dollar fundamentals, the USD fundamentals. So when we look at the USD JPY setup, let's break it down in a few minutes. So of course there is this area of expansion for possible buyers, and also we had this area of expansion here, this area here. This was a zone where the market moved to go give these buys. Then they came back, so they have to target this point here. Okay, so we expect them to target this point here. That's long term. So this is how it is going to be. This is what I expect. Daily time frame. The USD JPY. So USD JPY gave us this this move here. You see, that was a good buy. But on their way to give us this buy, they made this expansion here. So this expansion, as always tell you, those guys I have taught and those always follow up my analysis. This expansion is an indication that this expansion is an indication that this area has a strong what? This area here. Let me mark it for you when I say the area. So this is an indication that this area has a strong what? Strong buyers here. Okay, strong buyers here. Then it went on to sell to respect this what? Expansion area. You see, this expansion area was respected here. This was an area of impulsive what? Impulsive characters or impulsive move. So it happened, and you see the market tapped there, so it respected it. So it changed its direction to sales. That's on a daily time frame. But before it touches this expansion area, we have marked here. Let me hope you guys are following up. So this expansion area, which was marked here, or which was the initial move to create this strong zone here, they are targeting it. This is their target. Okay, so since it's their target, we expect them to sell back again to tap this area, and this area will take them back to time high. But this is how it's going to happen. I don't expect that it's going to just move straight like that. No. So this is what I expect. I expect this. I expect this to come and tap this area here. Okay. Then see the sales. That's on the daily what? Daily time frame. So let's zoom down to see our area for possible sellers. Okay, so let me first remove these arrows here. Okay, yeah, so let's zoom into 4 hour. So this is how our 4 hour looks like. Okay, this is our 4 hour what? Our 4 hour time frame. So these lines we have drew them on the higher what? On the higher time frame. Okay, on the higher time frame, that's the daily. So meaning we expect, according to the analysis we have done in the previous breakdown on the daily time frame, we said yes, we know they are targeting to sell up to this point, but we don't expect them to just sell up to this point. No, the market doesn't move like that. Even if they try to, they can just give us some sales to stop on this point here, then they will go back to another test this zone. They can't go and leave this zone hanging. So let's first mark it up. So meaning we are going to focus on this area. This is the zone we are going to focus on. Okay, that is the zone we are playing with. So let's zoom into 30 minutes. So 30 minutes, this is how it looks like. So we had a zone here, a possible zone for buyers. Let me first mark, okay, let me first mark the pivot one. So when I say pivot point, it's that zone which is more likely to change the game for us. Okay, guys. So already we are seeing that the market, one of the possible zones, I had this in mind. I told you that I was already modifying my stop losses for it. So one of the zones has already been what? Respected. That's if the market tends to continue in buys. Okay, but that's zone one. Then our next zone, we shall be looking at this zone here. Okay, so those are the zones we expect if we are to change this game. That's if they are to buy. Okay, so zone number one, it's already in play. The market is already respecting it and buying. Okay, now where do we expect at least our take profit should be if they happen to buy, if USD JPY happens to buy, our take profit we should mark this highest point here. Okay, you can just put a dotted line here to remind us that this is also a strong what? This is also a strong zone there. So that's 30 minutes. So, but if we happen to look, do you remember this line, the dotted line you are seeing, that down one here? This was drawn on a daily time frame. Okay, so we can mark it. We can mark it. Why am I marking it? As we have seen on the daily time frame, okay, that yes, if they happen to just sell, they can't sell up to this down a line we have drawn here. You see this line here? No, they can't do that. The market can't just sell off like that. Okay, so if they happen to break this zone and they sell, we have two entries. Expect to have two entries. If they break through this zone and this one, then it means they are going to buy from this point. Like it or not, by all means, the USD is more likely to be strong. According to the fundamentals, the data we have broken down, you have seen the data we have broken down, and it is making more sense. Okay, so this is how the market, our setup looks like. If the market happens to buy from this point, if they happen to have a spike because of the actually, let me just put a dotted line here. Let me hope you guys are following me. Let's just put a dotted line here that this is already respected what? Respected zone. So if they happen to, if they intend to just proceed buying where they are, but personally I believe they are more likely to do so. Okay. If they don't, let's say we have a spike. The spike is going to be these two zones here. That's areas of those spikes. But as we speak now, the way the market looks like, we can just say, if possible, we can look for some buys. We can hide our stop loss maybe behind this zone here, and maybe we target the target of this what? Target this. Okay, so that's a what? A possibility. So that's our analysis. So I summarize in 4 minutes why we conclude like this. I said whenever we make our analysis, we break it down into 3 parts. Part number 1, we talked about fundamentals on Forex Factory. We have looked on our Forex Factory, average hourly earnings. We are more likely to say positive what? A positive dollar. Okay. We have looked at the non-farm employment change. Yes, it went down. That was fast before we went to do the elections of Donald Trump. It went down 12K, but the forecast is 280. Imagine 218. That's the forecast, 218. That's a very big change. So let's say it doesn't happen to 218. If it doesn't happen to 218 or above it, okay, or above it, it doesn't go above it, or it comes below it. Let's say if instead of 218 and it's 180, if we see 180, we are going to see some spikes. That's if we see a low. The spikes maybe touch this one of this zone 1 or 2. After touching these zones, then we are buying. If the data comes when it is above 218, we are not going to see a spike. They are going to respect this zone where the market is already, is. Get that's fundamentally. Unemployment rate is more likely to be kept stable, 4.1%. You know, and previous that was October. It was positive. It was kept stable. November, and also it is forecasted to be stable in this month, December. Okay, that's fundamentally on the Forex Factory. Outside the Forex Factory, we know Donald Trump is coming in. In January. Is the President-elect Donald Trump is taking it in January. So since he's coming in January, it's more likely to push the US what? The US dollar. That's also another thing to hold on as we're backing up the dollar. Okay, so we have seen all the possibilities. It's now 1 minute to go, guys, and we see what happens. Let's follow up on our DXY setup we did. DXY. So there is a possibility of touching here or here, but I don't think it will be that much. So let's wait and see in seconds from now. Just seconds from now. That's like 30 seconds. That's like 24 seconds. That's like 20. So let's wait and see how it plays. We have to first confirm our data. Okay. Okay. Let's wait our data and see. Yeah, non-farm employment rate is positive for the what? For the dollar. Okay. But the unemployment rate has done what? Unemployment rate has been negative for that dollar. So like it or not, this is the right time to buy that dollar. Okay. Don't be fooled with the sales. This is the right time to buy that dollar cheaply because it's going to buy. You can put in your buys. You can start buying now. You can start buying now. You can start buying. You can start buying. You can start buying that dollar. Okay. Guys, it is positive. It is a positive dollar. Don't be fooled. You can still, those who want, you can sell gold. Those who want, you can sell gold. If you want, you can sell gold. You can sell. Those who are selling with me, we can sell gold. It is a positive. That spike as we have predicted, it has happened as we predicted. Put in your gold sales and try to hold. Give it enough stop loss. Let me look for the gold. You can fold it up together. XAUSD. Yes, this is XAUSD. So you can put in some sales as we are targeting this point here. You can target this point there. Give it a very big store, not so much big, but enough stop loss. So some people are asking me here, why are we still looking for gold sales? So let me break it down for you. So as we have seen, this is our analysis. We have seen a positive what? A positive, we have seen a positive dollar, that is positive, you see 0.4%. Also, we have seen a positive non-farm employment change. Expected was 218. That was the expected one. Okay, so since the expected 218, the only difference has been on what? On the unemployment rate. Unemployment rate had the what? The unemployment rate had the difference. Okay, so that's why we have seen that small spike. Okay, so that spike we have seen, yes, we can see it. It happened, but the dollar remains what? Remains strong. So if you have your funds and you trust your money, you can still be putting in some what? Some, for example, let me use gold. You can still be looking for some gold what? Gold sales. Okay, you can still be looking for some gold what? Some gold sales. Let's check and see also as we are waiting for. This is, let me give you a simple setup here for gold. This is the setup for gold. That's the setup for gold. So we are targeting this point. Setting your stop loss should be above this zone. Okay, put your stop loss above that is what? Above that zone, and you sell up to this point. Okay, so let's sell. Our sales are coming, our sales are visible. Hold. So that's why you always have to read the fundamentals. So hold our gold sales. We still look for our gold sales. Our stop loss, we can put it, stop loss has to be behind here. Here. Your stop loss has to be behind there. Okay. So put your stop loss there. I believe and I guarantee you it will work out. You see USDJPY? Guys, you see USDJPY? USDJPY has respected our what? Our zone, as we said. So that's how analysis works. That's how analysis does what? Works. So this is our target. If you want to buy USDJPY, that's our target. Okay, so remember we have two zones. We have this zone where the market is playing from, and also we have this zone here. You get? So we have two zones. This one where the market is playing from, and it is more likely to play out. If you can put in some buys. USDJPY. Hold on, guys. So that's our setup for USDJPY. You can take it, it is still on the entry. You can take that and put your stop loss where you see I have put this one. Put your stop loss there. So if they happen to hit our stop loss, our next entry has to be in this zone. Let me hope you guys are following. Hold. Guys, hold. Hold USDJPY, it will play out. Also, those who want to sell gold, when it continues pushing up, you can start putting in some small entries of sales. Okay. Okay, so stop loss, put the stop loss where I have showed you guys. That's entry number 1 and entry number what? Number 2. Okay, guys, I'll stop here. But we have this entry number 1 and entry number 2. I guarantee you entry number 2 it's also available. We can take our sales from that from that point. Okay, guys, let me stop here. Thank you so much for today.